Hey there, I'm Katarina with Realty One Group Coastal, and today I wanted to go through a mid-year market update for housing in Charleston, South Carolina. First of all, how is it the middle of the year already? But anyway, today I'll be going over some of the statistics for home sales in Charleston and what's happened over the last year with real estate. Charleston Trident Association of Realtors just released a headline that inventory of homes for sale on the market has gone up for the first time since April of 2020. That's 15 months of seeing a decrease in inventory of homes for sale every single month until last month when it finally went up, but just by a little. This is a good sign that the market might start trending towards a more normal market with more homes for sale and less competition for buyers. When looking at the year-to-date statistics, sales volume, so the amount of sales that have happened, have gone up 32% over the last year. So far in 2021, 12,123 homes have sold, whereas last year at this time, 9,201 homes had sold. Median price is another statistic that we've seen a big change in. So right now the median price is about $340,000, which is an increase of 18% since 2020, when the median home price was $289,000. Now this is the stat that's the most mind-blowing. Inventory of homes for sale has gone down 72% over the last 12 months, with only 1,600 homes for sale at the end of June, according to the Charleston MLS. And this was a slight increase since the month before. So we were seeing about 1,500 homes on the market for quite a while since 2020. The new construction market of housing has also been greatly impacted by the lumber shortages caused by factories being shut down during 2020 because of the pandemic, and the shortage of materials has led to even more competitive market in housing because builders can't keep up with the demand and they can't get the materials in time. Now, a good sign is that the Commerce Department reported that housing starts were up 3.6% nationally in May, which means that hopefully more new housing will be available for buyers as well. Now, this slight increase in inventory over the last month is a good sign for the market, but I don't see there being a huge shift quite yet. It is still very much a seller's market, so if you're considering selling your home, it's still a great time. But I would encourage you to think about doing it sooner rather than later, because with inventory increasing, your home might not be as competitive as it might be now. But if you're a buyer in this market, it's still a great time for you because interest rates are still very low and are expected to rise later into 2021. But with more inventory means that your offers won't have to be so crazy just to get the home that you want. Many buyers over the last year have had to give up a lot just to get their offer accepted. I've seen a lot of waived appraisals, as is cash sales way over asking price, which is obviously not ideal when you're trying to buy a home. With more homes to choose from, it'll be less competitive and they won't have to write such crazy offers just to get their home. Now, what about foreclosures? In 2020, to protect the economy, the government imposed a moratorium on foreclosures, meaning that if you weren't able to make your mortgage payments, they forgave you and you wouldn't lose your home to a foreclosure again. But into 2021, as the economy recovers, that will soon be lifted, and some expect a flood of foreclosures that will impact the housing market. While we may expect to see some foreclosures on the market, here's why I don't think it'll greatly affect the housing market. One, Charleston especially is a very investor-saturated market, so I expect many investors will be able to pick up those properties and it won't impact the market on general buyers too much. The second reason I don't think foreclosures will impact the market too much is that owners are in a great equity position right now. If they've owned a home for many years, they will have seen a great increase in value on their property, and they can likely go on the normal market if they're not able to afford their payments right now and still take a profit from their home. Now maybe they recently bought a property and then lost their job. In that case, when they don't have much equity in the property, that's when I would expect to see more foreclosures. But the reason that this housing market, despite it being so strong and hot, is so different from the housing bubble of 2008 is because they are different issues entirely. In 2008, the issue was caused by subprime lending, so mortgages were given to people who would not be able to pay those mortgages over the long run. People who should not have been able to qualify for a home were given a loan, and this drove up housing demand and prices. When the market crashed because people were given loans they were not able to pay, that's when there was a flood of foreclosures. In this case, over the last year, it has nothing to do with subprime lending. Lending criteria are very strict, and people who can afford to buy a home are the only ones that are given loans. This time, the issue is a lack of inventory on the market, along with incentives for buyers such as low interest rates, and personal incentives for people to want to leave where they're currently at because now that they can work from home due to the COVID pandemic, they can live wherever they want. And so a lot of people are finding that moving is the best option for them. So if you're waiting on the market to crash before buying a home, I urge you to reconsider, because I really don't see home prices going down too much over the next year, even if a lot of foreclosures do come on the market. Charleston especially is in very high demand. While prices have gone up exponentially, it seems, over the last year, they may plateau and level off, but I don't foresee it crashing and prices going down. Another good sign for the economy of South Carolina specifically is that our unemployment rate is about where it was before 2020, which is a great sign for the housing market as well. Leisure and hospitality is one of the few sectors where unemployment is still very high, but this is a sector of the market where people tend to rent instead of buy, so it is not significantly impacting the housing market. Right now, it's looking like the biggest threat to the economy is inflation. In this figure, you can see that the inflation rate has been about 2% annually. However, in 2020, it's at 5.3% as of June 2021, with core inflation at 4.5%, which is obviously a big increase compared to the 2% that it's normally at. This means that the Federal Reserve will likely increase interest rates again with this high inflation in order to slow down the momentum of the US economy in an attempt to reduce inflation. However, since the United States is still recovering from the pandemic, we haven't seen a rise in interest rates yet, and we likely won't see one until the economy is almost completely recovered, probably towards the end of 2021 or later. Another good thing is that this current high inflation is likely to be temporary. This is because the pandemic threw off a lot of supply and demand over the last year. With industries coming back to pre-pandemic levels of production, we'll likely see a stabilization of prices and therefore inflation rates. So, to sum up all of this data, inventory has gone down a large amount over the last year, 72%, but sales volume has increased along with home prices. In the coming months, we should expect to see a hot seller's market still, but things might slowly start to return to normal. If you would like more information on the housing market in Charleston right now or what's for sale, let me know and I'm happy to help. I hope you enjoyed this market update and thank you for watching.